My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends, just trying to make you some money. My job is not to entertain, but to educate and teach, so call me 1-800-743-CBC or tweet me at Jim Cramer. So market's going to be open for business. The perennially cautious Dr. Tony Fauci, the president's COVID doc-in-chief, sounds like he's getting a tad more hopeful about our containment efforts. He's taking back the original projection of 100 to 200,000 deaths because it looks like some of our mitigation efforts, like social distancing, might be working. While the turnabout in less than a week is pretty sudden, especially when the death toll from this thing keeps surging, the market's thrilled to see Dr. Fauci saying that we're making some progress against this pandemic. And that's why the Dow surged 780 points today. S&P gained 3.4%. NASDAQ climbed 2.58%. People are betting on a return to some sort of normalcy, perhaps as soon as next month. Maybe that's when America could be open for business. Now, I have been a whole time a big believer in Dr. Fauci. Long before this, I've been a believer ever since he helped turn HIV from a death sentence into a much more manageable lifelong condition, something that seemed inconceivable back in the 80s. So it's hard to see Fauci be, let's say, more optimistic about the battle against COVID-19. Although, let's be clear, he didn't say we can stop doing social distancing. He certainly didn't say we can go start having parties. In fact, he says, quote, now's not the time to pull back at all. It's a time to intensify, end quote. And that's a vital caveat. And we should all be proud of what we are doing to mitigate and keep the pressure on this dreaded disease, which is too lethal versus anything this easy to catch, maybe since the Spanish flu in 1918. Some say even worse than that. And that's why when we do open for business, the new normal won't be like the old normal. And you must understand that because it matters for your life and your portfolio, particularly today when a lot of companies went up that maybe they shouldn't have. By the way, lightest volume in a month. Assuming Fauci is right, though, to be more optimistic, and I think he is, what does the new normal look like? Well, first, the retailers that do well when we open for business will be the stores that actually have been taking share this whole time. Walmart, Costco, and Target. These companies have mastered the art of e-commerce, and they're ready for customers no matter what. They have good hygiene policies and great call-aheads. If anything, their pickups are better than they were before the pandemic. Costco reported March sales tonight. They were spectacular, but the stock's down as people bought a lot of lesser-quality retailers. This happens repeatedly. My take, what a chance to buy the best of breed at a discount. And we always want to buy the best of breed. I'm betting most of the department stores will choose this moment to permanently close their worst locations. And what does that mean? More market share for outfits like these. But it also means Amazon will be more powerful than ever. Maybe that when we're really open for business, I'm going to stop letting those corrugated boxes aerate on the porch for a couple of days before I spray them with Lysol and open them and see what Amazon sent me. Each time we have one of these situations where you can't go shopping, you end up buying more stuff from Amazon and less stuff from supermarkets or drugstores. This week, I put a bunch of things I always buy at Walgreens on auto delivery with Amazon. Why bother going to the store when shopping's a health hazard? I always buy the same stuff anyway. Hey, the new normal is kind of like a Dollar Shave or Harry's for everything. Now, I know that Dr. Fauci doesn't want to encourage people to go outside. He wants you to stay inside. He wants us to keep social distancing. When the virus peaked in Spain and Italy, people started lowering their guard, and now they're seeing an uptick in new cases again. Suboptimal. And that's why I doubt we'll ever go back to shopping like we used to. Everybody's going to be on edge unless both workers and shoppers have face masks. I think everyone should have their temperature taken first thing when they go to work. Come on, OSHA, please step up and do your job. And that's going to be the new normal because anything else is irresponsible. To make this more convenient, you know what we need to do? We need to have wearable devices like this one, the Apple Watch, take our temperature. I know they can't do it yet, but come on, they got a lot of good scientists there. And if they can do diabetes readings with Dexcom, I got to believe they have to come up with a way to measure your body temperature. You know what? In a post-corona world, this would be the killer app. They would have 317 million American customers tomorrow if this could measure our temperature. You check into work or a store or stadium or airplane by waving your Apple Watch in a meter. Number too high? Out of here. And that's not all. I think wearables can make this new world a lot more convenient, but I also think so can phones. When stores start opening up again, I expect long lines snaking all over the place with people standing 6 feet apart. Now, it's bad enough when I go to my TJX on 14 Pine Street downtown, and I have to wait behind 20 people just to buy my jockey briefs. A lot of info there. Now the line will snake all the way back into the luggage section, or maybe in women's lingerie. No way! Good thing I found these briefs on Amazon, although they're more expensive. This is where your smartphone can help, okay? We need devices with near-field communications, so you can just capture the barcode and just go like this. Boom! Right? Apple Pay. Boom! Boom! And then what happens is that you pay, and then you go home, and that's it. Right? You don't have to wait for the register 6 feet deep. What the heck is that about? I mentioned TJX because they get their merchandise from distressed department stores, and oh boy, that means they're going to have a lot of great stuff once America reopens for business. By the way, Matthew Boss tells me that Ollie's is also going to have a lot of great stuff, and you should look at the stock of Ollie's. TJX stock got crushed. So did Ollie's when COVID first struck, and now they're bouncing back hard. Now, we sold some TJX for Travel Trust, and I think it may have been premature, but that's okay. I tell the club, ActionAlertsPlus.com club, everything I can, and I think that I did not expect Fauci to be as positive as he was. It's a different tone. You want to take a real flyer on America going back to normal? Let me give you one that is just so hated right now. It's incredible, and it's called the Walt Disney Company. To me, Disney becomes have 98.6 degrees, we'll travel. Last night, the company caught a downgrade that spelled out all the damage the pandemic's done. No theme parks, no movies, no sports, no nothing. No Mickey, for all I know. What if the ESPN has something new and fresh, though, because things get better? In the meantime, I bet Disney Plus is making a fortune while everybody's on lockdown. What else? As someone who co-owns a bar and a restaurant, I know the money from the Small Business Rescue Package is a huge help, and I love the community package. I love the program. It's a brilliant program. But even with that assistance, a lot of operators won't be able to make it. The shutdown's just been too hard. I don't think they'll be back. You know what that means? That means good news for the chains like Wingstop. They're really doing well. Domino's. And now Darden today saw an upgrade. Yeah, Olive Garden, Capitol Grills, and Longhorn Steaks all over the place with low rents. Finally, gave a real oddball one. Another one everybody hates. Even some guy just downgraded who loved it forever. Estee Lauder, EL, which is one of the best-run businesses in the world. The stock's been hit with a series of pandemic-related downgrades. Makeup is so discretionary. You don't need it as much when you're working from home, right? But you know what? Estee Lauder's huge in China. And China's now coming back in a big way. And by the way, I think Ulta Beauty will be selling tons of their merchandise. Sure, the department store chains are in bad shape, but Estee Lauder spent years diversifying away from those outfits. And believe me, selfies are going to be more in fashion than ever. And Facebook, Instagram, more stories than I've ever seen. Not that they're making a lot of money with it, but Estee Lauder is bottom line. I know Dr. Fauci's not signaling all clear. He's saying the lockdowns are working, which is why we need to keep up the social distancing, keep the pressure on. But he certainly sounded a little more positive about the death toll. So maybe we'll be able to open for business sooner. But remember, even when the lockdown ends, you got to be prepared for a new world that looks very different from the old one and a lot more investable for the big guys and not for the little guys. Brandon in Minnesota. Brandon.
Hey.
Hey.
Thanks for everything you do. We appreciate it up here in the Great North.
All right.
I have about $120K in liquid capital. How fast or slow should I start buying into this economy, and how diverse do I need to be, and in what sectors?
Well, you got to be incredibly diversified. It's really important, and I do that for my Travel Trust. And like what I've been saying is that you have to own, let's say, if you want to own restaurants or retail, you got to own the biggest of this and the biggest of that. You can't just be small and selective. You've got to own big in each category because we need big balance sheets. Big balance sheets and diversification can get us to the next level. PJ in New Jersey. PJ.
Hey, Jimmy Chill. Thanks for having me.
Quite welcome. Quite welcome. What's up?
So I've been an avid fan and a longtime watcher of Mad Money. I'm in my early 30s and looking for kind of good long-term investment opportunities and willing to take a bit of a more aggressive strategy to drive higher ROIs. So I'm calling about Best Buy, which has been suspiciously quiet over the last month and a half in the midst of COVID. Stock's down about 30% from its highs, but also up 30% from the lows. Just want to see kind of what your perspective is on.
I've just been saying that you got to own the big guys, not the little guy. Best Buy is the big guy in the category, but you know what? In the end, that category has just gotten too tough. The electronics business is too tough. I think it's a no. And by the way, let me just point out again on the Disney. Tonight we found out that Disney paid subscribers for Plus doing much better than expected. So I think a lot of these guys have been downgrading Disney. I think they're going to have to eat crow. All right, maybe some crow with like some matzo, you know what I mean? The market's picking up steam on the Passover. Happy Passover. The market's picking up steam in the belief that a return to normalcy could be in sight. And when the economy does reopen, portfolios need to be adjusted for a changed world we will inevitably face. On Mad Money tonight, we've seen so many coming to the aid of the front lines here, and it's actually quite chillingly positive. I'm talking to CEO of Salesforce, Mark Benioff, about how he's helping. You won't want to miss that. Then, as the COVID-19 pandemic continues, could a company like Perrigo be worth considering? I'm talking with the maker of over-the-counter drugs to hear about demand. And how is the coronavirus impacting the rollout of new medicines? I'm going to be talking to Biohaven CEO to find out about his launch of its new migraine medicine. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.